Okay, so let's start with today's stream. Yesterday I tried to do this, but I am too tired. I have started a little bit, but then I have to stop. So today I hope we can finish this, and let's see if we can finish it in 2 hours. Okay, so let's see. So today we are working on again LCCI Level 3 Financial Accounting ASE20097. We're working on December 2021 paper. Let's move on. Again, 5 questions, 100 marks. We have to answer all the questions, no choice, or compulsory. First question. Okay, we are already told that it is correction of error. Correction of error here. Identify the type of error. Oh, and then extended trial balance. Okay, it appears now. Good. Okay, because extended trial balance, if you know the stuff, it gives you a lot of marks. You can see 15 marks here for filling in those items, and you are only asked to work on the adjustment columns, not even SOPL that we have been dealing with last time. So 15 marks here. Okay, and then explain something about materiality concept. Okay, good. Now let us move back. Type of error for the first 4. Okay, and then also item 5 and 6. Okay, do not have to identify the error, but then we still have to update, put the adjustment in the extended trial balance. So let us start with item 1. Let me type the question detail first. Extended trial balance. Extended trial balance. Okay, good. We have to identify the type of error for item 1 and 4, and we will do the adjustment at the same time so that we don't have to go back to it later. Purchase invoice had been overstated by 1250. Purchase invoice overstated. This is the source document. So when the source document is incorrect, then the whole entry will be incorrect. We enter into the day book incorrectly, and then the subsequent ledger accounts will also be incorrect. So if we have to identify the type of error, it will be the error of original entry. Okay, all the things will be incorrect. When your purchase invoice is overstated, okay, that means your purchases, your trade payables are overstated. Let us find the purchases first. Purchases here, it is in the debit side, trade payables in the credit side. So if you want to reduce it, it goes to the opposite side. So debit purchases is in the debit side, reducing it will go to the credit side, 1250. Okay, and for the same reason, trade payables, it is in the credit side balance, normal balance. If we have to reduce it, 1250 here. Let me mark down this as item 1, okay, for your better reference. Next, item 2. A payment by check for stationery 85 had been entered on the credit side of the stationery account and debit side of the bank account. Okay, if we have a payment for an expense, credit bank payment, debit the expense. But then here you can see the whole entry had been reversed. You credited the stationery account and debited the bank account. That being said, the error would be called error of reversal. Sometimes you can also just reverse part of the entry. Okay, so to be safe, sometimes you can also specify that it is a reversal in full, or you can also call it a complete reversal. Okay, because it can be reversal in part or partial reversal. Okay, only one side of the entry is reversed. So how to change it? Let us find bank first. Bank is in the debit side. Stationery is in the debit side as well. Okay, because one is asset and other one is an expense. Okay, so when you make payment, you actually credit it. Okay, you should credit 85, but instead of crediting, you have put into the debit side. The way to correct it is to charge double. Okay, the first time being the cancellation of the wrong entry, and the second time will be putting it right. So item 2, stationery, the same. Okay, this one, let me put down it is 85 times 2. 85 times 2. Item 3, receipt 200 from Bob, a credit customer, had been recorded into the account of Rob. So this is an error of commission. M-S. Error of commission. Okay, this is an error where you put into the wrong account, the correct amount, correct size, but then wrong account, and these two accounts are of the same type, of the same nature. Okay, for example, if you put expenses into another expense account, here you put trade receivables into another trade receivables account. Okay, then these are of the same type, same nature, so error of commission. Okay, and because of that, you are going to, take away from Rob and then put back to Bob. Okay, that makes it net off. The trade receivables account, you will have one subtraction, deduction, and one addition. So there will be no effect on it. So the next one, item 4. No entry had been made for the disposal of machinery costing 16,000, accumulated depreciation 9,600, which was sold for 7,900. Okay, that is good. You have more items to deal with. So first thing, you are told that there is no entry made. That means, of course, here the type of error, it will be error of omission. Okay, double S only, single M, double S. Be careful with the the spelling. So the whole disposal is being omitted. That means we have to do it from the beginning. For disposal, you have to take away from the cost, take away from accumulated depreciation, okay, and then you also have a receipt proceeds, okay, put into the bank. Okay, having these three items, then the balancing item will be disposal, okay, because you have a disposal account. So let's start with the cost. The cost is 16,000. Machinery is a debit account. I have written it here. Okay, that's why you will credit the machinery cost account. 9,600 from accumulated depreciation, which is originally a credit side account. So if you want to reduce it, 9600 here. This is item 4, item 4. And then you receive an amount. I think it is 7,900. Is it? Yes, 7,900 receipt. Okay, so if you want to record a receipt of bank, okay, you have it in the debit side because it is a debit side balance, debit side account. Okay, the receipt of money is also in the debit side. So we have finished the three items. Then we have to deal with disposal as well. Double entry. Okay, you can see we have two credit entry here, and then one debit. Two debit entry in bank and machinery accumulated depreciation, which would go into the credit side. Okay, and then the 16,000 credit in the machinery cost account will go into the debit side of the disposal. It is just like you working on a disposal account. Disposal, okay, you will have 16,000 here, 9,600, 7,900. So this adjustment column of the disposal item will just act like this ledger account. Okay, so 16,000 here, and then credit side, you won't put two accounts. Two items, because it is not an account, it is an adjustment column, so you have to add these two up. 9,600, 7,900, 17500, like that. Okay, and you show the workings. 9600, 7900. Okay, for me, it is also correct to put only the balancing item. That means if you have these ledger accounts, you will have 1,500 here as the balancing item, disposal gain, put into SOPL, disposal gain here. Okay, for me it is okay to just put 1,500 in the debit side of the disposal like this. Okay, like this. Okay, but then sometimes to be safe, okay, we put both the debit and credit side of the item, okay, to make sure we can get the full marks for this item. And if you look at the answer key provided by LCCI, okay, it will do something like this. Okay, and 3 marks here. Okay, unbelievable, 3 marks. Okay, for just one item. Okay, and then 3 more marks. Okay, for the entries in the top. Okay, so item 4 finish. Let me erase it. Let us go on to item 5. Payment for telephone expenses 490 been posted to the repairs account as 940. And let me see. My cat is chewing on the box. No, I have fed you already. Okay, let's go back. So we do not have to identify the type of error, but if you have to, there are 2 errors here. First of all, error of commission because we have telephone expenses posted to repairs. Second thing, okay, you can see the amount is wrong. Okay, 490940, this can also be called an error of transposition. So telephone expenses, repairs. Let us go to the extended trial balance. Let me erase other things first. Okay. Let us use green for this. Telephone, debit side, and repairs, debit side, both are expenses. Okay, it should be telephone 490, so I just put it there. 490, this is item 5. But then we put it into repairs 940, so we have to take it out. Okay, we have debited repairs account 940, so we take it out by crediting. You can see so far, before item 5, we have the debit side and the credit side of the adjustment columns balanced. But now here, we have debited 490, credited 940. This error, for correcting this error, we have to use the suspense account. The balance there would be 450 debit. 450 here, debit, item 5. The suspense account, okay, we have learned it since level 2. It is temporary account that hold the difference between the debit side and the credit side totals of the trial balance. Okay, when there is error, okay, it's possible that we have a difference, and we have to put that difference there in the suspense account. Okay, and by identifying, locating all the errors and correcting it, the balance of the suspense account should be gone. That is our purpose for working on this using the suspense account. Okay, so this is item 5. Last item, item 6. Total discount allowed in the cash book was overstated by 135. Okay, this one we have to be careful. I will explain one alternative answer for this item, but then we will work on this item according to answer key first. Okay, 135 discount allowed in the cash book overstated. So we have the cash book, 3-column cash book. Discount allowed is in the debit side of the cash book, together with the receipts from trade receivables. And then after adding up, okay, we have 135. Okay, discount allowed, and then this one, not 135. We have a total of discount allowed for the month, and then we put it into the discount allowed account. So this 135 overstated. Of course, it's very simple. We just take it back. Okay, reduce it. Discount allowed is in the debit side because it is an expense. If we want to take an amount away, we credit it, item 6. So if the way we deal with trade receivable is that we put the total amount of sales, total amount of receipt, total amount of discount returns into the trade receivables account. We call it this way by using the control account as part of the ledger. It seems it is the case here. If it is like this, okay, the control account here, then we will put 135 adjustment here in the trade receivables. Okay, why am I writing the figures wrong? 135 here. Okay, if we use the total, post the total every month in the control account of the trade receivables. Okay, that is the assumption that is taken in most of the level 3 questions. Okay, this is making sense. Okay, because in our ledgers, usually it is very difficult to put, to give one account to each debtor, each trade receivable. Okay, you will have thousands or even more trade receivables account, and this is not feasible if you have a very large company. That's why you use the control account, the total trade receivables account in the ledger, so just one account, and then you have a subsidiary ledger, a record for each of your trade receivables. This is making sense. Okay, so this question and most of the level 3 questions assume this treatment. Okay, but then if you are more careful, then you should be putting control here as well, control account here. Okay, then we know this is the case. We don't have to make any assumptions, because if the control account is not part of the double entry, the individual account is part of the double entry, then we will have another way of doing it. Okay, because in that case, only the total is incorrect. Only the total incorrect. In the day book, this is not day book. In the cash book, when you work on each item, okay, this is the 3-column cash book. When you work on the receipts and you have the individual items of discount allowed, okay, then you put these individual entries into your ledgers of different trade receivables. You put it like this. The entry is already done, and the total you put it in the discount allowed account. In that case, if individual accounts are used, then you have to put this 135 in the suspense account. Okay, and personally, I think in this question it is not very clearly stated which method is being used. Okay, we are just making assumptions according to what these questions are usually like. Okay, anyway, okay, we have finished this 15 marks extended trial balance. So next, we have to explain how the materiality concept is applied when recording the purchase of items of stationery. Okay, materiality concept, I have to say, okay, usually we focus on just one part of the materiality concept, okay, because in these exams, okay, it states that usually it is like that. If the item is small, okay, if the item is not small, okay, but costing an insignificant amount in material amount, okay, then we can choose, a simpler method of recording. Okay, that is when we have small amount, okay, buying office supplies, okay, that is what we call stationery. Then we put into the stationery account, which will go into the expenses for the current year. Okay, so that is what we need to write. Okay, we record it in the stationery account and it goes to expenses instead of putting it into the non-current asset account, because some of the stationery, most of the stationery, we might use it for more than 1 year. Imagine you have a stapler, imagine you have a small calculator. You are not using it just in just 1 year. You will use it for more than one, okay, maybe 5 years. Okay, because we are not talking about the staples in the stapler, we are talking about the stapler itself. It lasts for more than 1 year. Then, according to very strict accounting rules, okay, what we should do is actually record it into the non-current asset and depreciate every year. Okay, but then there is a constraint called a cost constraint. You are using more accounting resources than the benefits it brings. Okay, you have 50 calculators in your office, and then for each one you have to, see on average you use it for 5 years, and then you depreciate each calculator by 5 years. Okay, what's the use of it? It is not significant, not material after all. Okay, it is not affecting your decision. Okay, so this is one part of one side of the materiality concept. Another side is that, okay, how about if it is significant? Significant. If it is significant, then you should record an item separately. Okay, let me give you an example. Okay, again, let us still use these items, small items, okay, to mention. Okay, so usually when we buy these stationery, okay, or office supplies, okay, we will put it into this stationery or miscellaneous sundry expenses, something like this. Okay, but then you have purchased an antique maybe calculator, antique calculator, okay, nice, and you put it into this stationery or sundry expenses. Okay, and this doesn't make sense. This antique stationery, antique calculator, you are not using it in your day-to-day operations, day-to-day operations. Okay, you are putting it as a decoration, or you are putting using it occasionally when maybe some of your big customers visit. Okay, you want to show off. Okay, then it is not stationary at all. In essence, it is not stationary, and for the amount, it is larger than what stationery usually consists of. Okay, so you should record it as record this item separately as non-current asset or as investment or something like that. Okay, sundry expenses, you have very large item inside it and you still call it sundry. Okay, miscellaneous, it doesn't make sense. Okay, so this materiality concept, let us don't forget is it also have another aspect of it. Okay, not just that if it is insignificant then it is expenses. Okay, so next we have single entry. Okay, when we have this type of outlook, we know that, okay, it is single entry. Let me change the question detail first. Single entry. Okay, this question is quite interesting. You will see in a minute. Okay, so you can see we have opening and closing balance of some of the items. It is not a full list. Okay, because at least if you have a full list, you will have trade receivable, but you don't have it here. Okay, you don't have bank opening balance, closing balance, no, but then you have cash in hand. Very interesting. And you can see cash in hand change, okay, from 330 to 123. Very interesting. And you have a bank summary, cash, bank, trade receivable, trade payables, rent and rate, office expenses, office equipment. All purchases are on credit and sales were on a credit and cash basis. Credit sales given to you directly. Credit sales 24760. Office expense is paid out of cash. Okay, that is our unbanked revenue. Unbanked revenue. Okay, but then we have to see, apart from these two, is there any other? Because usually if you have the whole list of unbanked revenue, you will be told that all the cash received banked except for this, and that. Okay, but then this time you are not told about that. You are just told that these two items are paid by cash. Okay, see this very small difference in how the information is given to you. What we have to do, state 4 advantages of keeping full accounting record. Okay, 4. This time it is, really something. 4 advantages. Usually you are only asked to give, 2. Okay, but then you need 4. So we have to be prepared. And then we have to prepare the trade payables ledger control. Usually, by doing this, you can find credit purchases. And credit purchases is the only purchases you have. Okay, just now we know this from the additional information. And then the statement of profit and loss, only the trading section. Okay, that means only sales and cost of sales. We have inventory, we have purchases just now. Okay, and we have cost of sales. We don't have sales. Okay, but then from the markup, we can find the gross profit, and then we can also find revenue from it. Okay, very interesting puzzle-like question. I like these single entry and also the statement of cash flows. I like this type of question. Okay, just like working on a puzzle. Okay, and then after this trading account, we also have to work on the cash account. Okay, cash account, let me see. We have the opening and closing balance. We have, by now, we have cash purchases as well. And then let's see what other things will be here. Okay. Interesting, because you can see you have cash drawings. Okay, good. Very interesting question. So let us start, okay, by giving the 4 advantages of full accounting record. That means double entry. Okay, single entry, you just have part of the accounting record. Usually the most important ones are the cash book. Okay, you will have a cash book. Okay, because for these small companies, cash is the most important thing. And then you have the record regarding trade receivable and payables. You know when you should pay your supplier. You know when you should ask your trade receivables to settle their accounts. Okay, so only these 3. But then for double entry accounting, full accounting records, you have a trial balance. You have the ledgers. Okay, modern accounting, always use double entry. Okay, a very simple yet efficient in an effective way of recording all the things you need to know about the financial status of your company. Okay, so what are the advantages? For me, the first thing is, okay, I have trial balance. Okay, this is one of the most important part of double entry system. I have the trial balance, and using this trial balance, I can easily locate or identify errors. Okay, so that you can correct it. You can also say that it can avoid having errors in your financial statement. Okay, not avoid having errors in your accounting records, because trial balance is the midpoint of your financial records. Okay, so together with this, okay, I was saying because of the double entry system, it enables you to have some control procedure. Trial balance is one type of control procedure. A control account, one type of control procedure. Bank rec, also one type of control procedure. Together with other control procedures you have during the double entry accounting records. Okay, it helps you do one thing, okay, with different type of control procedures like trial balance, control account. Okay, it can help you avoid or reduce the possibility of fraud. Okay, because if you are constantly checking on different things, okay, you have control procedures, then it is more difficult for your staff or other people to cheat you. Okay, if it is more difficult to do that, then fewer people would risk to do that. Okay, if there's no control, you just keep all the cash in your drawer with no records. Okay, everyone knows, your staff know. Okay, they can take away some cash without any way you can find it. Okay, you are inviting frauds or theft. So, item 3, I would say, also because of the trial balance, also because with the use of ledger accounts, okay, you can always do one thing. Okay, that is to have immediate access to financial information. And because of this, it can enable more informed decision making. Okay, these two are actually one point, but then if you are asked to give 4, then somehow you have to separate it, okay, so that you have more points to score. For single entry, okay, all you have is I just mentioned cash, trade receivable, payables. You know these items, okay, but then if you want to know how much you have spent on wages, how much you have spent on for example electricity, how much purchases you make, okay, you cannot know it immediately. You have to go through all the items to find it, to calculate it. But then with double entry system, full accounting, okay, everything goes to the ledger. Okay, if you want to know wages up till now, you go to the ledger account, calculate the total. Okay, it is all there in one account. You don't have to search for every entry of wages in your cash book. Also true for sales, for any other item. Okay, so now we go on to the calculation part. We have 3 accounts to prepare. Trade payables ledger, you have the trade account, you have the cash book, cash account. Okay, and let's look at it here. Trade payables ledger control, of course. Okay, you use this one: opening balance, closing balance, and also the amount you pay your trade payables. No other items. Okay, no hint of discount received or returns. Okay, nothing. So with these 3 items, you will find credit purchases. Okay, so let me mark down the items first. 1, 2, 5, 4, 0. Okay, opening and closing balance first. Trade payables ledger control. Okay, trade payables is in the credit side. So usually I would do this. Okay, credit side. Okay, add here in the credit side. Opening balance, date year 2020. Let's see the marks. 4 marks. Okay, 4 marks. No marks for the date and description, but then we still work it out nicely. Balance brought down, we have 9670. Okay, I will mark down all the other items first and then put in the amount. So here you will have purchases. purchases, and it is credit purchases. And then on the other side, 30th September, you will have bank. Okay, these are the payments that you make. Okay, credit, bank, debit, trade payables, ledger control. Okay, you can see if you have to work on the control account as the total, you always tell the other citizen control account. That's why I say it is not so good in the first question, extended trial balance. It is confusing. Okay, bank, I haven't marked down this item yet. Okay, but then I have balance carried down 12540 here. Okay, let us skip one line. And always, if you have balance carry down, always immediately write balance brought down. Okay, don't give a chance of not gaining the marks, because very often you are awarded marks here in the brought down side instead of the carry down side. Okay, so let us go back to the question. Let's see how much payment to trade payables, 76265, 76265 here, 76265. Okay, so you finish. I mean, we finish. We are finished. Oh no. Okay, so now you have the purchases being, oh, how much? One more thing. I almost really forgot. Okay, here we still have one more item, 2980 here, paid by cash. Okay, wait. Oh, okay. Trade payables paid by cash. Okay, 2980. So apart from the bank item, you also have cash here. 30th September, cash. Okay, 2980. 2980. So you should have 82115. I almost forgot. Okay, so usually to make it less possible for a mistake like this, okay, when I myself is working on the papers, if I see we have trade payables 2980, usually I will immediately write here, okay, to remind myself, because I cannot, read everything in 1 second. So when I see one thing, I know that they are in a group, I would do something like that. Okay, so we have finished the trade payables ledger control account. You can see 4 marks. 4 marks, we have 5 items. Maybe we don't have any marks for your opening balance. Okay, next. Statement of profit or loss. Okay, statement of profit or loss. Let me write down the format first. Okay, 2 column. For this, we will have first of all revenue, and then cost of sales. Okay, you should be very familiar with this format. Opening inventory, add purchases, okay, which we have already calculated, and then sometimes you have to skip one line. Okay, I don't see the need, but then I will follow. Closing inventory, because you have to calculate one more subtotal, which I don't like. Okay, then you have cost of sales here. With the cost of sales, you can calculate gross profit. Finish. Okay, we already have 3 items. We have opening, closing inventory, we have purchases. Okay, so purchases 82115. Okay, and opening and closing inventory here. Let me mark down 75808450. Okay, 75808450. Okay, then 7580. Why? Better? 780580821115. Eight 91695 minus 8450 81245. Okay, so next we will go back to the question. Okay, very important point. Okay, that is here. Okay, 40% markup. 40% markup. Remember, markup. Okay, I always use 2 more words to help my student remember. Markup on cost. Always pair markup with the word on cost. Okay, markup on cost. The cost of sales we have already calculated. Then 40% of the cost of sales would be the gross profit. Okay, so now we can work on this. 40% on your cost of sales would be your gross profit. So gross profit is equal to 8281245 multiplied by 40%. Okay, that is 32498. And with this 2, 4, 5, you will have 113743. And that is, you add gross profit 32498, okay, together with your cost of sales 81245. I myself is a very careless person. Okay, a lot of times making this careless mistake. Okay, that cost me a lot of marks. Okay, that's why I, if possible, I always use another way to verify my answer. In this way, okay, I would do something like that. Okay, if we have the base, mark up on cost, right? That means the base is cost of sales. Okay, 40% being the gross profit. That means for the sales revenue, it will be 140% of your cost of sales. So I will verify. Okay, 81245 multiplied by 140%. I will check 81245. 140%. Yes, it is equal to the revenue that we have calculated. Then I will be very much relieved. I know that I am correct. Okay, so next part. Prepare the cash account for this year to show the cash sales and cash drawings. Okay, we have cash drawings. Okay, we have opening and closing balance. We have receipts from cash sales. We have cash sales banked. We have expenses paid through cash. We have payment to trade payable through cash, and then we have cash drawings. Okay, everything is given to us by now. At least we know the item. we have to put the figures there. So cash account. Cash account is in the debit side, it is an asset, so add in the debit side minus in the credit side. Year 2021, 20 for the opening balance, 1st of October. Balance brought down. Okay, let us look at the amount we have. Cash in hand 350 and then 123. Okay, let me put these two items first. Okay, and I will also put the items, okay, not the figures yet. Okay, because I always teach my students, when your brain is still dealing with the items, okay, it is logic. Okay, but then when it deals with numbers, it is calculation. You are using different part of the brain, and if you mix it up, your brain have to switch jobs. Okay, and you will be slow and you will get easily confused. So I encourage my students to deal with logic first and then numbers. Okay, so many times, and you can see I always write the format. If I can write the format, I write the format first and then fill in the figures. So we have opening balance, but then I remember 350, so I put it first. Okay, and then everything else happen in the last day. Sales, cash sales. Okay, what else do I have? Year 2021, 30th of September. I have is it office expenses? Office expenses. Okay, I have trade payables. Okay, you can also write trade payables ledger control. Okay, and I have banked, and I have cash drawings. Okay, you don't need to write cash drawings because drawings is an account. Okay, so it go to the details of the account. Okay, but then cash drawings is not an account, so you can maybe you can add by saying that this is cash drawings. Okay, and then last you will have your balance carry down. Okay, 1, 2, 3. I remember it like that. Okay, so 1, 2, 3 here. Year 2021, 1st of October. Okay, cool. Office expenses, you are given directly that it is 4500. Trade payables given directly 2980, so we will put it there. Bank, the not payment, but then cash banked. Okay, you are given directly, again given directly here. Cash banked 69470. Let me mark down 69470, and then you are given credit sales 24760. Why is this important? I will show you. Let me mark down first 24760. Okay, so let us go back to our cash account. Cash banked 69470. Okay, and then credit sales given to us 24,760. Okay, it is used to calculate our cash sales because we know from our previous part C, that our revenue is 113,743. Okay, this is our total revenue. Okay, if we have credit sales of 24760, we know the remaining would be our cash sales. So 113,743, 24760 we have cash sales of 88983. Okay, and after this, we have to balance our account. Okay, giving our drawings, cash drawings 12260. Okay, and it is done. I like this question. Okay, it's quite challenging. I mean, not for me, but then maybe for my students, because you really have to know what's in there to be able to, find the answers. Okay, you are not given everything. You have to find out what you need to find out. And I like this. And I hope my students can also, have this ability to know, because if you know this, you pretty much know accounting, at least at that level. I hope in this last series of exam in September, LCCI is not trying to, make it unnecessarily difficult for them. Okay, and although Pearson will no longer work with LCCI, it will be taken up by another institution called the IAB, Institute of Accountants and Bookkeepers, I think. Okay, and LCCI exam will continue, hopefully. Okay, but then maybe it will be in year 2024. I don't know how many series will that be, and I don't know whether we can easily take it as international students. Okay, we'll have to see. Okay, let us treat this exam as the last exam that we have. So item 3, you can see, question 3. You can see from the face, okay, we already know that it is partnership. Okay, partnership is good. Usually it is quite easy. Okay, partnership. Well. We have 2 partners. Okay, let us look at what we need to do first. State the reason where goodwill. Okay, why do we need to value goodwill? Okay, and then prepare the current account of one partner, capital account of, again, that partner, and okay, there is a loan, and we have to show this is 1 year afterwards, 1 year later, the amount of loan to be shown. Okay, 1 marks, another marks. Okay, and then last thing, okay, new partnership. Okay, so one is leaving, one is joining in. Okay, whether the new partnership will benefit from converting to private limited company, or 5 marks, and must justify your decision. Okay. Type of business organizations. These parts are easy. Okay. You just compare partnership with limited company and then make a decision. Let's see. So these REMA, and CIMA were in partnership, sharing profit and losses equally. The partnership also pay 5% interest on opening capital. Okay, be careful. Opening capital, and then 10% on total drawings. Year end is on the 31st of August. For the current year, it is year 2021. Okay, so given to us opening balance of capital account, current account. Okay. Okay. Total drawings and then share of profit. Wow, interesting. Very interesting. Okay. Okay. So on the 31st of August, okay, this time is at year end. Good, because last time it is in the middle of the year, then we have to apportion the profit according to the old and also the new partnership. Okay, this time is at year end. Okay, Rama left and Tima joined the partnership. Okay, one going, one in. Goodwill was valued at 30,000 and partners agreed not to maintain. Okay, so we have goodwill created and then goodwill written off. Non-current assets were revalued upwards by 50,000. All these are done before the change of partnership. Okay, this is a revaluation of asset and revaluation of goodwill. And then after the partnership, we have goodwill written off. The amount due to Rema was settled by an 8% loan, 75000, and the balance by a check. Loan is repayable. Okay, this loan is repayable in 5 equal installments, starting on the 31st of August. That means by next year's year end, you would have repaid 1 installment, and then another installment would be, in the would be within 1 year. Okay, that means partly it would be current. Very interesting. But you do not have any information about the new partner joining. Okay, because you also are not asked to work on the new capital account. Okay, good. So we can calculate one thing first, because we have 5% interest on opening capital and 10% on drawings. That is, for the current year, you have 10,000, 5%, that is 5,000 for interest in capital, and then 2,150 interest on drawings, total drawings. A share of profit given to you directly. Okay. Okay, we will deal with the goodwill, 30,000. Non-current asset, 50,000. We'll deal with the answering of concept questions later together. Okay, let us deal with the account first. Current account of Rema. Current account is capital in nature, so addition in the credit side, reduction in the debit side. Year 2020 opening balance. Is she having debit balance? Current account, you can see we have debit current account, so negative. Okay, doesn't matter much. It says debit, then it is debit. Okay, year 2000, 1st of September, is it? Yes. Balance brought down. Opening current account being 14,000 for Rema. We don't need to calculate for the other one. Okay, so during the year we have appropriations, right? So 31st August, and so this is from the appropriation account. Appropriation. Okay, and from this we have interest on capital, which is an addition, and also share of profit. Okay, but then for August, right? appropriation. For interest on drawings, it is in the debit side because the partners have to pay the business. Interest on drawings. Okay, and apart from this, we also have one more item, that is drawings. Okay, so now we can put the figure. Some of the item I remember, so I don't need to go back. 21500 as the drawings, and then interest on drawings will be 2150. Okay, 6 mark. I don't think you need to show the workings. No space of giving you marks on that. Interest on capital, is it 5,000? 5,000. Share of profit, I really don't remember, so let us go back. Share of profit 11400. 11400. Okay, that's all. So we have to calculate the balance. Okay, this time we are not giving a balance carried down and balance brought down, because by the end of the year that we have the retirement of RIMA. Okay, so we need to transfer this amount, this balance, to the capital account. Okay, we still have to see how much, but then it is not a balance to the next year. Okay, so we have 21250 here. Okay, the debit side of the account is more than the credit side. Okay, you always give the total, but I would save some time on this. Okay, you know you should put an item there. 31st of August, it goes into the capital account of RIMA. Okay, remember, don't just write capital, because we have 2 capitals account so far. Okay, and then in next year you also have the capital account of TIMA. Okay, so make sure when you write capital, always follow which capital account. Okay, which partner's capital account. Okay, 21250 there. Finish. Capital account for the next part. Okay, again, opening balance, it is capital in nature, equity is in the credit side. So we have year 2020, 1st of September, balance brought down being 100,000. Okay, and at the end of the year, 31st August, first of all, you have a transfer from the current account of RIMA. How much? 21250. Okay, next you have the revaluation. Okay, and then you have the goodwill, and then you have to settle the balance of capital with RIMA. When we have a revaluation, it is a revaluation upward. Let us go back and see, make sure. These 2 items. Okay, goodwill, from nothing to something, it is a creation, revaluation upward. Okay, this amount will be gained by the partners. Okay, both partners will gain from it. Okay, and then non-current asset also revalue upwards. Okay, so gain for both items of revaluation, 30,000 and 50,000, and then it is shared equally. Okay, and it is settled by a 75,000 loan, 8% loan. Okay, here we have all the necessary information already. Okay, let me use another color for the revaluation part. 31st of August, okay, we have goodwill, and then we have Okay, I think here you have two choices. Either you write revaluation, okay, the revaluation go through the revaluation account, or if it's just one item of revaluation, it is also possible that you use the method for goodwill. You just write non-current asset there. I think both will be acceptable, okay, but then I write revaluation here. Goodwill is 30,000 shared equally. Revaluation of the other item, it is 50,000 upwards, so it is 25,000 shared equally. The next part, I will use red for the final settlement, year 2021, year already written, okay, 31st August. Okay, we know there is an 8% loan from REMA, and then the other part is paid by check. Okay, that's it. Here we have 40,000, that is 140. Oops. Okay, so 8% bank loan, not bank loan, 8% loan from REMA, 75,000. So the remaining item, 21250, 75,000, 140,000 would be 43750 bank. Okay, final settlement done. Okay, very nice and neat. Okay, no confusing part. Very good. Calculate. Okay, calculation only. For REMA's loan, the amount to be shown in the statement of profit and loss account for the year end next year. Okay, you have you are borrowing 75,000 from REMA, okay, from the start of the year till the end of the year when 1/5 is repaid. So essentially you are borrowing it for the whole year. So you are paying interest for the whole year and giving you a 6,000 interest. Okay, I would also like to write down what it is. Okay, it is an interest expense. Although you are not asked to tell us what it is, but then I think it is also nice to do that. Okay, so statement of financial position, you have borrowed 75,000, and on the last day of the year you have paid 1/5 of it. Okay, so 1 minus 1/5, 5 equal installment. Okay, 75,000. Okay, it will be equal to 60,000. Okay, but then this one I would be more careful. Okay, this part I do not like how it is asked. Okay, I do not really like. Okay, because I should do something like this. Okay, we have non-current liability. Okay, 45,000, and then current liability we have 15,000. It should be asked like this instead. Anyway, the answer provided by LCCI is like this, 60,000, just it. But then I have to tell you, because this part should be repaid on the 31st of August, year 2023. That's why in our current statement of financial position, it should be current. Okay, so next we deal with the concept part. Conceptual questions. State the reason for valuing goodwill when a partner leaves the company. Okay, goodwill is created during the operations of the company. Okay, so it would only be fair always when we work on a revaluation of assets and liabilities during a change of partnership. Okay, it's always about fairness. Okay, it is always about fairness. Okay, because during the operations, okay, sometimes the book value would be different from the fair value of the assets and liabilities of a business. Okay, and if there's no change in partnership, then the current partners, enjoy what it is in the business. Okay, there's no need to change. But then, if there is a change, then we have to be fair to everyone. Okay, so to be fair for fairness, okay, because during operations, goodwill is being built. And have to and should be quantified if there is a change in the partnership. Okay, I would say something like this, and I think it would be enough. So next part is about converting to a private limited company. Okay, of course, you are given the command word discuss. Okay, but then for me, I would almost always use, both sides. Okay, so for, that means there are more benefit. Okay, and then I would also suggest some drawbacks. Okay, the benefits are easy. Of course, you are protected. The partners are protected by limited liabilities. Okay, if you have to explain more, then you explain what limited liabilities is. Okay, second, usually it will be easier. Okay, because for a limited company, there is a stricter requirement about the setting up the operations of a business. Okay, not everything is controlled by one person. Okay, and it is stated very clearly that how the business should be run. Okay, so it would be easier to get finance. Okay, whether it is from a bank or from another investor. Okay, and this will enable growth. Okay, better chance of growing. But of course, there will be drawbacks. Okay, the drawbacks maybe, okay, there is more formalities. Okay, more difficult to create. Okay, you will have to be audited. Okay, so there will be extra cost. Okay, but remember, although I say I would prefer writing the drawbacks as well, you should always, because in this one you have to discuss whether the new plan will benefit. Okay, so you should focus more on the benefits. Okay, and then write just maybe one point of drawbacks. Okay, and then make a conclusion. Okay, Usually, I would prefer to say that it is beneficial. Beneficial. Okay. So, change. Okay. It would be nice for them to change to limited company. Okay, 5 points, they are not very demanding. Okay, but then make sure you have enough points. Okay, if you have 2 points or 3 points, it would be nice. Okay, because they have positive markings. Okay, so it is 10:15 now. Okay, I would like to take a 5-minute break. Okay, you see I also create a scene for break time. Okay, break time for my brain. How do I mute this mic? See you in 5 minutes. Okay, let's continue with the remaining two questions. Okay, let's continue with question 4. Question 4. Okay, a bank summary again. What is it about? Let me see. Okay, we have to prepare the statement of profit and loss. Given to us the format already, so that's good. And then the statement of financial position of tier. This time no format given. Okay, so should we classify it as single entry or just sole trader? I wonder. I would still say that okay, it is a sole trader and it start business. Okay, let me change the question detail first. Sole trader. Okay, that's it. Sole trader. Okay, so first of all, what happened, little kitten? Okay, later after I finish the streaming, I will take my cat for vaccination. It's now around 3 months. Very naughty cat, but all kittens are naughty, I know. She's cute, she's naughty, and she's a kitten. Okay, now it is sitting quietly, yes, beside me. It is raining outside. Okay, let us focus. So just calculations, and then we still have one little question. Effect on equity if there's no insurance for theft. Interesting. Then we will have an expense, of course. So 1st of September, Tia started the business, introducing premises, and then 3 computers each. Be careful, less be careful, each. Okay, that means we have 12,000 computers. Okay, on 1st of January, that is during the year, 6% bank loan received. Okay, receive a bank loan. Okay, bank loan here 20,000, and then repayment during the year. The loan is repayable in 5 equal installments on the 30th of June and 31st of December each year with interest. Okay, so here we have bank loan interest as well. Okay, let us see if it is correct. 6%. So we have 20,000 and then 6% and then half a year. Yes, it is correct. 20,000, 6% and then half year. Okay, this is correct. But then make sure we know because of this, we also have from 1st of July to 31st of August, we still have an accrual of interest. Okay, later we remember that. Okay, on the 1st of August, that means almost till the end. Okay, 1 computer was stolen, and the insurance company agreed to pay a claim of 3,000. And then we purchased a replacement on this day. She provided information as follows. Okay, so receipts, 6% bank loan. Okay, fees, okay, that would be your income. Sales of software, okay, your income. And then what? Payments. 6% bank loan repayment. It is 1/5 of the loan taken out. And office expenses, 98,400. Bank loan interest, remember we still have 2 months of accrual. Computer, the replacement costs you 5,000, and then drawings, and then insurance. Okay, also you have fees owing. Okay, this is your income in arrears. Okay, and we put it here first. Okay, just like what I told you. Okay, if I see something that need adjustment, usually I put it in another area, so that when we work on the statements, it will be easier and faster. Insurance included 500 for the month ending 30th September year 2021. So our year end is 31st August, and we have prepayment. Okay, so insurance here minus $500 prepayment. Office expenses 9400 for the development and sale of accounting software. That is your cost of sales. Okay, office expenses here 9,400. Okay, not related to your own office expenses. Okay, but then it is part of the cost of sales. Computers are depreciated 24% per annum using straight line method, calculated on a monthly basis. Wow, this one is interesting. Okay, so we have read the whole thing. Now we have to put I know why they have to give the format. Okay, because this part you have to be careful with all the items. Statement of profit and loss. Fees. Okay, for the fees, okay, you have that 150 plus some of the fees that is owing to you. Okay, so 154,350. Okay, here I also put the calculation 4350 owing to you. Okay, so 150,154,350. Profit on the sale of software. Just now you have income. Okay, and then you have the development cost. Okay, that means you only have a development cost 9400. You have 600. Okay, total income 154,950. Okay, next part you have the bank loan interest. Okay, this one, first of all, we have calculated that it is correct to have 600 for the first half of the year. It is taken on the 1st of January. Okay, and by 30th June, end of June, you pay 1/5 repayment, and then also half year. Okay, we have already calculated that it is correct for the half year interest. And then for the second half, let me use another color. For the second half, okay, you have 20,000 and then you paid 1/5 already. Okay, 1/5 being 4,000. That means now you have 16,000 for the bank loan. Okay, 6% and then 2 months for July and for August, 2 months. Okay, so here 20,000 minus 4,000, 16,000, 6%, and then 2 months you have 160. This is an accrual for you. Okay, so 760 bank interest. Office expenses, you have 98400, but part of it is development cost. Okay, so 98400 minus that 9,400. Okay, it will give you 89,000. Depreciation charge, it is monthly. Okay, we have not much space here, so I would do calculations here. Okay, I will separate it like this. We have 3 computers. 2 of them will be used from the start. Okay, and then 1 is stolen on the 1st of August. That is 1 month till the end. Okay, and we purchase another computer for and use it for 1 month. Okay, so 2 computers. Okay, and then the stolen computer, and then the new computer. Okay, so it would be 4,000 multiplied by 2 multiplied by 24%. We use it for the whole year. 4,000 to 24%, 1920. Another one, 4,000 and then 24%, but then only for 11 months. So 4,000, 24%, 11 months. Okay, it would be 880. And then your new computer, you purchase it for 5,000. Okay, and then use it for 1 month. 5,000. Okay, 100. Okay, let me check. Okay, your total depreciation will be 2,900. For this part, make sure you give the workings. Okay, because you will be expected to give the workings. Okay, if not, then if your total is wrong, then maybe you have all the items wrong. If not, maybe you will be given 3 marks. Okay, I'm not sure. Sometimes it is, sometimes it is not. Loss on the disposal of computer. Okay, this is interesting. Okay, we will do working 2. Okay, the claim would be 3,000. Okay, the cost would be 4,000 with accumulated depreciation. Okay, so 3,120 as accumulated depreciation. That would be 120 disposal loss. Okay, insurance, easier. You have 15,000 and then 15,000 and then 500 being prepayment. Okay, so you would have 14500. Okay, not that difficult. Total expenses here, and then you will have profit. I mean the final result, I don't know if it is profit or not. 107,280. 47670. Okay, so that would be your answer for this part. Okay, next part, statement of financial position. Again, I would draw the whole format first, okay, and because you need a lot of concepts, I mean not concepts, but then it is logic. Okay, so first of all, let me do it a little here. Okay, so non-current asset. Okay, you can also show it like this. Okay, maybe three column. So you have the cost, accumulate depreciation, and also the carrying value. Okay, so you have premises, you have computers, total non-current asset. After this, you have current asset. Okay, you don't have any inventory, you are a service business. Okay, next one, trade receivables. Anything? Trade receivables. Yes. Trade receivables. So you can have trade receivables or trade and other receivables. Okay, so I would do something like this. Okay, other receivables, because you have prepayment. Okay, and then you have bank. Okay, I hope we don't have bank overdraft. Let me write it first. Okay, and then you have total asset. After that, you also have equity, opening balance. Okay, and you have profit for the year. You have drawings. I remember you have drawings. Okay, total closing equity. Liabilities. Okay, for liabilities, you have non-current and current as well. Non-current liabilities, you have 6% bank loan. Current liabilities, you do not have you do not, let me see, do you have any trade payables? I think no trade payables, so you have other payables. Okay, and then you have the 6% bank loan. Okay, you can also write the bank loan first. Let me write bank loan first. Okay, because this one would be maybe more important. Okay, and then other payables. Okay, that's all. So you have total equity and liabilities. Okay, finish. Now we go to the, let me draw the lines first. Trade and other receivables here, bank here, the total asset, drawings, bank payables. Okay, like this, finish. Okay, so let us start. First of all, you will have, let's see, premises, okay, and then computers. And then we will also look at the accumulated depreciation. For accumulated depreciation, we only have these two items, 190, 19200, 1920, and 100. Okay, so let's see. Here, 10,000, no accumulated depreciation, so still 10,000 here. Okay, for computers, you have 4,000 multiplied by 2, and also another one, 5,000. Okay, so it would be 13,000. Accumulated depreciation, it is 1920 plus 100, so it would be how much? 2020 negative 113. Mm-hmm. 10980, so total 110980. Okay, let me use another color for current asset. Trade receivable, you have here this one, 4350 fees owing to you. Okay, so it is receivable. Then you also have prepayment for other payables, and then the insurance claim, it agreed to pay. You can see they agreed to pay and it is not yet received, so it is also a receivable for you. Okay, it is not from trading, so it goes to other receivables. Okay, so here we have 4350, and then for other receivable you have this 3,000, the insurance claim, plus the 5,000, so 3500, 7850. Okay, and then we go back to the question. We have to calculate the amount of bank we have. There's no cash taken in the company, so you start with zero balance. 20,000. Okay, you have 12,000. 12000 plus 19850. One 30830. Okay, next part, hopefully we can balance. Okay, opening balance, we have, let me use another color, 100,000 premises plus 12,000 computers. Okay, so it would be, okay, why is the line here? Let me erase this line. I would like it to go back to the last column. Okay, so 112,000. profit for the year, just now it is 47670 profit, and then let us go back to here. You can see, okay, the profit 47670, and then here we have the bank summary drawings 45,000. Okay, 45,000 drawings. 45,000. So 112 plus 47670 minus 45,000. 114,670. Bank loan. Okay, bank loan. Just like what we mentioned earlier. Okay, we have 1/5 paid already. We have borrowed this 20,000. Okay, and then 4,000 is already paid. Okay, but then we have to be very careful because okay, very soon we will pay. Let us see. We have the year end being August 31st. Okay, and then we have 16,000, and then next you will pay on 31st December year 2021, and you will also pay on the 30th of June year 2022. Okay, 4,000 and 4,000 here you will pay in the next year. So non-current, okay, only 8,000 left. Okay, 2/4. Okay, 8,000 left here. 8,000. And for bank loan current liabilities and other 8,000. Okay, you can see this one is current. This one is non-current. Okay, last we have other payables. Other payables is 160. That is the interest. Okay, you can see here. Interest, we have paid 600, but then for 2 months accrual we have 160. Okay, you should pay but not yet paid. Okay, so 16,000. So 8160 here, 16160. Hopefully we can balance. Plus 16160. 3, yes, good. 130,830. Finished. Next, effect on equity if there is no insurance for theft. Okay, if there is no insurance for theft, okay, you have 2 marks. Okay, you have 2 marks. Okay, that means the insurance company give you a claim. Okay, there would be no claim of 3,000. Okay, that means disposal loss would be 3,120 instead of 120. Okay, that means your equity, your profit first. Profit will go down by 3,000. That means equity, final equity will also go down by 3,000. That is the immediate effect on it. But then if you think one step further or one step before, okay, profit. Okay, if you do not have insurance for theft, does it mean that your insurance expenses would also go down? It does. And it should. Okay? But then, in this question, if you are only asked the immediate effect, then you should just stop by saying, you know, let me change it back to red first. Profit. Okay, you should stop with the items I marked in red. Next question. Last question now. Question 5. Okay, provided to you balances and then reconciliation from net cash operating. Okay, and then what you have to do is, obviously it is a statement related to the statement of cash flows. Okay, calculate the adjusted profit and then the statement of cash flows. Prepare the statement of cash flow including reconciliation of profit. Okay, so that means everything. 2 marks, 9 marks, whole statement of cash flows, and then some ratios things. Okay, so let me change question details. Statement of cash flows and also ratios. Okay. So let us take a look. Question 5. Is it of the same year? We have to prepare for the same year, right? Yes. The company provides the following information: property, plant and equipment, open and closing balance, cash and cash equivalent. Okay, from positive to overdraft. Okay, you can see it here. Positive to overdraft. And then you have repayment of bank loan. Okay, that is 200,000. Okay, we can also take a look at the cash and cash equivalent from 150,000 to 169 overdraft. That is a decrease of 319,000. Okay, the reconciliation of profit to net cash from operating activities. Let's see if it is correct. Profit for the year 363, depreciation charge 220, add, correct. Increase in inventory 149, increase in trade receivable, and then decrease in trade payables. Okay, the direction is correct, the sign is correct, and then you have net cash from operating activities. Okay, no interest, no tax. Let us see if there is really none. During the year, there was no disposal of non-current asset. Very good. And no issues of share or payment of dividend. That's good. Okay, financing activities, that means we only have the repayment of bank loan. Oh yeah, we have bank loan. Why don't we have any interest? Not good. Okay, but here, if we are not given the percentage, that means that's it. Okay, we have to ignore the effect on interest. After the year end, it was identified that closing inventory included damaged items. Closing inventory included damaged items costing 200,000, which can be sold for 550 after repairs. Okay, again the inventory part, and we have to look at this is the cost. And how about NRV? NRV would be 550,000 minus 200,000, that is 35,000. Okay, when we compare, we can see the net realizable value is lower, the cost is 50,000, the NRV is only 350. That means we have an impairment of 150,000. Okay. Trade receivables, 12,000 to be written off. Okay, 12,000, 150,000. So first thing, adjusted profit. Originally the profit is 363,000. So if we when we have an impairment of 150 and irrecoverable debt of 12,000, the adjusted profit 363,150, 12. So we have 201,000. Okay, next part. We have the statement of cash flows, including the reconciliation part. We will start with 201,000. Okay, I just write the figure and I now have to write back the description. The first one would be cash flows from operating activities. Then we'll start with operating profit, or this is net profit. For the year. And then depreciation charge, okay, 22,000. Okay, next we are going to adjust for the increase in inventory, trade receivables, and trade payables. Okay, there's no change in trade payables, so we can just put it there first, 36,000. Okay, let me change the order first. Okay, so there is a decrease in trade and other payables, 36 minus. Okay, so inventory originally it is 149 increase, but then we have to reduce the inventory by 150,000, so now it becomes a decrease. Okay, 149, and then we have to take 150 from it. Okay, if we look it as a positive amount. Okay, for receivable, okay, we have to take away 12,000. Okay, so let us do it. Okay, that means now it become a decrease in inventory. Okay, and for receivable, it is still an increase. Okay, 149,000 minus 150,000. Increase in trade receivables. Okay, from 43,000 minus 12,000. Okay, so we have 1,000, 43, 31 now. Still like this. Okay, so here 220 plus 1 minus 31 minus 36, 154 355. Okay, there is one interesting thing I would like to take a look with you. Okay, let me write down first. This is net cash from operating activities. Net cash from operating activities, 355. Let us go back to the original question. Okay, you can see originally it is also 355. After adjustment for impairment of inventory and also bad debt written off, it is still the same. Why? It is because for these two transactions, these two incidents, there is no cash involved in it. Impairment, okay, you just revalue your inventory. Okay, it is originally worth more, but then from the review of the inventory, okay, impairment review, okay, you can find that okay, it is not worth that much. You in the process, you haven't paid anything, you haven't received anything. Okay, so non-cash transaction. Also true for trade receivable are to be written off. Okay, that means it is originally not written off, and for this, okay, you have an expense, you have reduced the amount of trade receivables you have, but then there is no cash involved. You haven't received any money or pay any money in this incident, in this transaction, so no cash involvement. Okay, no cash effect. Okay, so let us continue with investing and also financing activity. investing activity, we have to look at if we have any investment, internal investment that is involving in the purchase and disposal of your non-current asset. And then external investment. Okay, sometimes you have extra cash, you invest in the share and debentures and investment of another company and other business. Okay, so there's no external investment we can see here in the question, but then for internal investment, we have to see. Property, plant, and equipment we have here. Okay, how do we know? We have to see if we can reconcile to work on a reconciliation on the opening and closing balance. Look at the movement of the balance. Okay, so for non-current asset, we have 3076,000. Okay, we don't have enough space on the top, so we will work on it here. Opening balance, closing balance being 3,550,000. So for non-current asset, in between, what happened? Okay, there might be purchases. Okay, there might be disposal, but then here we don't have any disposal, so 0 here. And then you also have depreciation for the year, then it becomes your closing balance. Depreciation is given to you 220. So with this equation, we can find the purchases here, if there's any. 3076 minus 220. Okay, we have to put let me do it again. Is there's 3078 minus 220. Bank loan, overdraft, 274. Let me see again. How come? Plus. Depreciation charge. Okay. Oh, okay. Here, we have to be careful. You look at this. Okay, this is not talking about the carrying value. It is about cost. Okay, so here, if it is just the cost, okay, then depreciation is not here. Okay, so opening balance, add purchases minus disposal, there is none, then we have closing balance. Okay, so here the difference 3550. Okay, 474,000. 474,000. Okay, so investing activities. Let me use red. Cash flows from investing activities. Okay, so less purchase of what kind of non-current asset it is. It is property, plant, and equipment. Property, plant, and equipment. Okay, so 474,000. Okay, and total we have 474,000. Okay, you have to give the item and the total, even though there's only one item. Net cash used in investing. Okay, next one, you have cash flows from financing. Financing activities. So what do you have? Repayment of bank loan. Is it bank loan or debenture? Let me see. It is bank loan. Okay. Repayment. Repayment of bank loan. Okay, 20,000 and 200,000. So you don't have any issue of shares or dividend paid. Okay, so no more in financing. Okay, and then you can calculate the total. Let me use blue. 355 minus 474 minus 200. I have input 2,000 there, 200. 319. Is it familiar, this one? 319. This is net decrease in cash and cash equivalent. Okay, so you have opening balance and closing balance in cash and cash equivalent. So opening being 150 and then 169 being closing negative balance. 150, 169 negative. Let us calculate to see. Negative 319 plus 150, 169 negative. Perfect. Finished. Yes. Nine marks here. Okay, so we have the last part. Okay, seems it is different, separate from the first part. State what each ratio shows. Okay, inventory turnover. Okay, it shows the number of times, a business replace okay, that means purchase and sell inventory or goods in a year. Trade receivables collection period. The time average. Okay, usually we say average time taken for you for a business to collect the balance to collect the amount of credit sale proceeds from customers. Trade payables, again, the average time taken by a business to settle the purchase amount to its supplier. Okay, you just explain. Okay, that is not difficult. You should know it, and 1 mark, it is not demanding. Evaluate the effect on profitability for the year ended 31st September for the increase in trade receivable. Evaluation. Okay, for evaluation, you have to give both sides of the story. Okay, there is an increase in trade receivables originally. Now it is a decrease. Okay, now it is a decrease because of the irrecoverable debt. Okay, so for and against, okay, whether it's good or not, okay, I will evaluate in these two directions. Is it good to have an increase in trade receivable? Yes, it is good. It might be good, okay, because might be good because, okay, it is an indication of increased sales. Okay, if you have more sales, if you are keeping the same credit policy, then it means that you have increased sales. Okay, and maybe you have also increased the credit period given to your customers, okay, because you want more sales. Okay, or the second point will be prolong credit period to attract more sales. Okay, it can be good, but then this time I will focus for the against part. Okay, before I write this, okay, we have to say these might increase profitability. However, okay, I would focus more on the negative part. Okay, not good. Why? Because in this case, you can see we have irrecoverable debt. Okay, and irrecoverable because they haven't paid us. Okay, and there's a possibility. Okay, now we have irrecoverable debt. It can also be that we have an allowance for irrecoverable debt to be created. Okay, we should also consider this. Okay, and that will decrease profit because it is an expense. Okay, and because we have this higher level of trade receivable, it also involves more admin costs to deal with trade receivables. We have more credit customers, or we have a higher amount of credit customers. Okay, and we have to be better staffed to deal with them. Okay, more people have to be there, or junior accountant would be enough, but then we still have to employ more people, okay, to deal with this, to send them statements, to call them, to remind them to pay, okay, admin costs, and this also decrease the profitability of the company. Okay, so in conclusion, okay, it might negatively affect profitability. Here, I write one condition: if such an increase is not result from an increase in sales revenue. Okay, the business is advised to closely monitor the level of trade receivables. Okay, then it will be a very nice evaluation. Okay, so we have finished this set of paper. Okay, I think we have used around 2.5 hours with explanation. I hope it can help you. The next paper we will deal with, okay, would be this one, June year 2021. It is available on the official website of PSN LCCI. If you would like to take a look and then work on it together, please download it by yourself. I will also put the link, okay, for the official website. Okay, so feel free to take a look, and I'll see you next time. Bye.